Hey traders and investors, it's Serge Berger here. Today we're going to have a look at the healthcare sector, which is really crucially to understand that the healthcare sector was one of the reasons why the S&P 500 particularly actually crawled to sort of a higher high in September before now basically pulling back quite quickly. So looking at the healthcare sector is important, not only because of the healthcare, because it's a big sector, but also because it includes some of the momentum things like the biotech stocks, right? So we've talked about the biotech stocks for several times this year in these videos. And while through a technical lens, this stuff still looks okay, the point is that these things can deteriorate very quickly. So when you look at the healthcare sector, please also keep in mind the biotech stocks, because they are really what's going to sort of drive the acceleration or the gamma, so to speak, in the healthcare sector. So looking at the XLV, which is the sector ETF of the S&P 500, you can see that basically from a trending perspective, things are very much intact. The only thing that happened is we probably got a little bit overextended here on the upside. So there's very defined risk from my point of view, considering that I still think we're in a secular bull market. I do think it's probably at better odds to buy this stuff back on the dip rather than trying to short it, because of how erratically quick some of the biotech names can trade, and also because I don't really see the biotech stocks coming off of any dropping off a major cliff. So if you look at some of the select holdings of the XLV, like Humana, HUM, arguably you could say yes, there was a double top. On the other hand, you'd say okay, everything's holding from a trending perspective here, 200 days, 100 days so far, and also really what you had a very steep run off the early August lows. So from that point of view, this is not the kind of thing you want to necessarily blindly short into. If you're long, you can reduce some holdings. That's what we have done, but for the most part, it's probably better to look to buy this back on a dip. Could be as low as, in this case, in Humana, somewhere in the 115s or something like that, when we get back to the 200-day or something like that. But I'd probably shy away from trying to short this stuff again, because of the quick way in which some of the biotechnology stocks can trade. And speaking of biotech, from my point of view, yes, this stuff can certainly mean revert, by 10 or 20%. But at the end of the day, what you have here is still a very strong trend that looks to be able to continue higher. You can look at some of the individual stocks within this, like Biogen. I've talked about this extensively this year. This thing still has further to go to really prove the bulls wrong. It would probably have to break almost like $300 here at this point. But the point is, the longer a stock moves against a resistance point, the thinner that resistance point gets, or the weaker it gets, and ultimately the more powerful the ultimate breakout to the upside. You can see it again. We had another retest of resistance here in mid-September. It failed again. So now at this point, again, shorting this doesn't make much sense because it's still holding support. Buying it obviously doesn't make a lot of sense until we at least get a bullish reversal. So that's why I'm saying it's probably easier to buy these stocks back, or buy the healthcare sector back on a more meaningful dip, rather than trying to short this in any sort of meaningful fashion. Hope this makes sense. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.